With sterling behaving more like an emerging market currency, according to Bank of England Governor Mark Carney, and the euro on the way down ahead of the interest rate meeting this week by the ECB. Where's the best trade of the week in terms of the foreign exchange markets? Also taking a look at gold and silver as well with our guest at the moment, Bryan Noble from tradernoble.com. Bryan, welcome.
Thank you, Jeremy.
Eye of the storm in terms of trade around sterling at the moment. We've got this commentary from the Bank of England suggesting that the trade around sterling is making it look like an emerging market currency. And in fact, I notice as well, with sterling at these low levels, gold is at a record high against the pound at the moment. How do you trade sterling? What are your main points to watch out for?
Well, I'm actually bullish of sterling. I think all the bad news is in the price. I think last week's key week reversal is significant when we got down to 119.59 and closed over 123 the same day. I still believe that we're going to have another referendum. I think it's inevitable there has to be another referendum, and then we'll take it from there. But as of now, I've never seen a UK Prime Minister lose every single vote that he's put to Parliament. So it's an incredible situation. On the back of that, you think that sterling would be a lot lower. It's not. So you got to. The market that will not go down on bad news has got to be respected, as we've seen in the equity markets over the last couple of weeks.
Yeah, let me just quickly hone in on this, because this is the daily chart. We're going to the hourly chart. And in fact, the last 2 or 3 hours or so, Boris Johnson, or the government, have lost another vote in the Scottish legal system in the appeals court there, saying that the prorogation is illegal. And look at that, hardly anything happens to sterling. Yeah, you're saying because all the bad news
is all the bad news in the price. And key day reversals are common enough, but key week reversals are rare. So when you get a key week reversal that we had last week,
just explain what this is and how to trade it.
Well, basically we had a lower low in cable when it got below, that's dollar sterling, when we got below 119.80, when we got down to 119.59, and then we reversed. As you can see, we spiked off it, two huge green candles, go back over 123, which is a higher high from the previous week. So that's a key week reversal because we closed at those levels. So as long as cable can hold sort of 122.50 to 122.80, and the market should move higher. Where we really see a big move on this is if we can take out 125.20, then I think we can definitely say a bottom is in sterling.
Are you buying this at these levels? Or are you waiting for a better price to get in?
I would look. I think I thought today on the back of that vote we might get a better chance, but it's not. It's not giving you a chance. The shorts are trapped. As I said, all the bad news is in the price. So I kind of, we can get down to 122.50, which is not a million miles away from here. I would be a buyer with a 121.80 stop. So it's a good risk reward.
Yeah.
Certainly won't be short sterling.
Okay. European Central Bank interest rate meeting tomorrow. Let's take a look at what's happening with the euro-dollar trade. No one seems to like the euro at the moment. There's a lot of reasons to sell it against a number of currencies, including sterling, actually. What about the euro-dollar setup? Yeah,
it's amazing. With the currency differential, you'd expect euro will be down at 105, 106. Right. It's not. The only thing that concerns me with the dollar is Trump has got everything he's asked for since he became president. The one thing he has not got is a weak dollar. He has mentioned it on numerous occasions, but it hasn't worked out yet. Obviously, the interest differential is the key. Tomorrow, I think if Draghi does not follow through with a serious stimulus package, then this euro could really have a move to the top side. Are they going to cut rates again? There's uproar, the fact that we have $17 trillion in bonds in negative interest rates. Yeah. Are they going to cut rates again tomorrow? So this is a key meeting, and obviously you've got Lagarde coming in, who said that policy is going to remain easy for the foreseeable future. So personally, I will be a buyer of the euro between 109.40 to 109.80, with a 108.95 stop, which is just below the 109.26 low that we had 2 weeks ago.
Yeah. You mentioned the dollar. You mentioned what Donald Trump has been doing to the markets. Let's take a look at the S&P, because we look at this regularly with you and work out where things are moving. And the S&P 500, I was talking yesterday to an Elliott Wave specialist, and he's fairly confident that he believes we're going to see a new record high here, but is not sure he really wants to get involved in buying this market just in case it doesn't happen. Are you long on S&P?
Yes, I have been long. I was with you here 6 or 7 weeks ago. Yeah. The S&P was kind of trading around the 3,020. After the Fed meeting we had on the 31st of July, we got up to 3,027. The following Monday, four trading days later, we're trading 29.73. Yeah. Sorry, 27.73, one of the most incredible sell-offs. And since then, the market's just regrouped, gone up, had a few sell-offs in between, but now we're back to near all-time highs. I think a lot of traders are trapped short below 29.25. So as long as we can hold the 29.25 to 29.50 area, about 30 points below current pricing, I think the S&P will make new highs. How far we're going to go above that, I'm not too sure. Obviously, we're running into the dangerous 6-week period of the year between mid-September and the end of October, which is traditionally the bearish 6 weeks. And if anything like last quarter of last year, when the market fell 20%, so anything can happen with Mr. Trump with his tweets. Yeah. So it's really a Trump market as opposed to a technical market, because if he comes out with something with China, comes out and says we're not agreeing with China, then the market's going to dump again. And if they're saying they're getting agreement, then the market's going up. So it's quite difficult to have a position, particularly over weekends. But by and large, we're back above the moving averages now, which is significant. Especially the Dow to get back above the 50-day, which had struggled for a while. So we have the S&P over it. And interestingly, the transport index is beginning to perform. That's back above the 200-day moving average. And also on the back of the US bond market falling over the last few days, we're seeing the bank index get back above its 200-day moving average. So generally, when you see the transports beginning to perform and you get the bank index performing, the stock market overall should be okay. Yeah.
So you're long on both these markets. Whereabouts would your stop go on each of these? I mean, this is the S&P 500 currently at 2980. How far down would you put your stop?
I think 29.25 to 29.50 is good support. I'm not actually long. I'm a buyer 29.62 to 72 today with a 55 stop, and I'm a bigger buyer from 35 to 45 if the market goes down below that. I think yesterday told a lot. We got down to 29.57 and we closed at 29.80. So there was huge buying in the last 10 minutes into the close last night, and which I think is significant.
And the Dow?
As regards the Dow, as long as we can hold 26,400, bearing in mind we were down at 25,070 on the 5th of August. So we've had a couple of tests at that level. It's bounced back up. I think a lot of guys are still short. Everybody you talk to is bearish at the US stock market. And again, as I said about the cable earlier, a market that can't go down on bad news has got to be respected. And the economic news that's come out, by and large, on both sides of the Atlantic has been pretty dire. And we've seen the DAX have a 10% rally over the last few weeks as well. So it's perverse.
It's very strange. But at the same time, as we get all this fragility in the market, we've seen spot gold hit, I think, 6-year highs recently, silver 3-year highs, I think, very, very close to. Let's take a look at the gold chart and ask you what you're doing with this. Again, I want to refer back to a conversation I was having with a technical analyst yesterday, and he was quite happy selling this all the way down to 1350, actually. I think he was talking about a retracement here. Are you short on this?
Yeah, well, one thing that I look at a lot in markets is the daily sentiment index. And when daily sentiment index gets over 90%, you don't want to be long the market. Gold had a daily sentiment index reading of 95%, one of the highest readings in 6 years. All the managed futures were limit long of gold. They had the highest position on record. So when you see a combination of those two things, you're on alert to go short gold. Obviously, it's very, very difficult to be short gold because of the the nervousness in the equity markets. If they get a dump, then gold is going to go higher. But certainly, it's very hard to see gold, given the recent sell-off, to break this 1560 area. And I think, I would agree with your guy from yesterday. There's no reason why this can't go down to 1350 over the coming weeks. But I think if we got down to those kind of levels, then I'd be a serious buyer.
Yeah. One of the markets that's followed gold up quite late to the party, I think, relatively speaking, has been that of silver. And in fact, silver, the gap between the two, the ratios closed down a little bit between gold and silver. But the very similar sort of pattern here. We've got these big pullbacks, these big red candles that have seen us take a lot of money off the table for silver. Last couple of days, a little bit of buying.
Yeah, silver, just like cable had an upside key week reversal, as we mentioned earlier, silver had a downside key week reversal last week. So silver made a new high at 1970, incredibly close at 18. So we had a near 9% move in silver in 3 trading days. So a lot of money has come out of that market. Again, just going back to my daily sentiment index, that was up at 96%, one of the highest readings since July 2016. And I don't want to scare viewers, but the last time the DSI was up in the high 90s, Silver fell 34% over the next year. So silver has very good support at 1770. It needs to hold that level. If we break below 1770, then we could easily see silver follow gold a lot lower. But personally, I would be a buyer between 1750 and 1780 against this support area, looking for a move back to 1850, but I wouldn't be looking for much further than that.
Yeah, okay. All right, look, Bryan, thanks indeed for joining us. Bryan Noble from tradernoble.com. You can catch up with more with Bryan on his website.